What is Bitcoin? Bitcoin is an electronic currency, fake or virtual, that is traded online only, and has no physical or tangible existence like other currencies such as the dollar and sterling, and is used in transactions over the internet and is not controlled by any authority or central banks. Bitcoin relies on thousands of computers around the world that validate transactions and add more Bitcoins to the system. Bitcoin first came out on January 3, 2009, and it aimed to change the global economy in a way similar to what the methods of publishing on the internet and websites brought about, transferring a large part of the media to the internet. Who invented it? Behind Bitcoin was a person who called himself Satoshi Nakamoto, and described the currency as an electronic cash system that relies on peer-to-peer financial transactions, a technical term that means direct interaction between one user and another without the presence of an intermediary. However, last year, Australian businessman Craig Wright revealed to the British BBC channel that he was the inventor of the digital currency Bitcoin, which was rumored to be a person named Satoshi Nakamoto. The first trading price between this coin and the dollar was published, and one Bitcoin was worth $0.001. Bitcoin applications, sometimes called a Bitcoin client, allow users to interact with the Bitcoin network. In its basic form, the application allows the generation and preservation of user-specific keys and connection to the currency's peer-to-peer network. Easy purchase. Paying with Bitcoin is easier than buying with regular credit cards, and can be accepted without the need for a merchant bank account. Bitcoin payments are made through a Bitcoin wallet software, either through a PC or smartphone, by entering and sending the recipient's address and the amount paid. An espresso cafe in Vancouver, British Columbia, Canada, hosted the world's first automated teller machine, ATM, for Bitcoin on October 30, 2013. Can you generate Bitcoin? Bitcoin mining is intended to extract it, and to simplify the concept, we take the example of gold, which requires specific equipment dedicated to that purpose and great effort to extract it from the ground. Anyone and his device can generate Bitcoin, but unfortunately his device, no matter how powerful, will not withstand the enormous electrical pressure, and it will be damaged. Add to that the electricity bill that will cause it, and the solution lies in what is known as cloud mining. Advantages and disadvantages. Low fees. Instead of needing an intermediary between you and the merchant to transfer the money, and this intermediary deducts a percentage of the money with the presence of the Bitcoin, this process does not exist, because the currency was not transferred, but the currency code is what came out of your wallet and entered the wallet of the other merchant. Confidentiality and privacy. Bitcoin has a high level of confidentiality, as it is not subject to any control from a party, bank or institution, and all you need to send Bitcoin to another person is only their address. A global currency, it is not linked to a specific geographical location, so it can be dealt with as if it were the local currency, as it is not linked to a specific country or central bank, not even to an economy. One of the most prominent negatives of Bitcoin is the process of encryption and secrecy over the method of Bitcoin generation through complex equations, which may be an easy path to pass suspicious operations since they are not subject to any supervision. Bitcoin is not based on any assets or fair valuations that can be used to predict the rise or fall of this currency. Buying Bitcoin versus trading it. There are many ways to buy cryptocurrency Bitcoin and discover the opportunities this asset offers, as there are crypto features that allow customers to use credit cards and bank transfers to purchase cryptocurrency Bitcoin. Initially, the exchange was the only way to buy cryptocurrency Bitcoin, but these methods were developed thanks to the fact that Bitcoin is the most popular and widely used currency in the world. When you buy Bitcoin through an exchange, you will need to open a crypto wallet, then you will fully own the coins, and you can take advantage of the factors that create profits for Bitcoin holders. There are also peer-to-peer Bitcoin trading sites where people trade Bitcoins for cash between each other, as these sites have grown in popularity as they match local traders who want to trade Bitcoin easily using local payment methods. There are Bitcoin ATMs that are similar to traditional ATMs. They are not tied to any bank, but are linked to a crypto Bitcoin wallet. These machines allow investors to set the price of Bitcoin and buy the currency through debit and credit cards. The location of Bitcoin ATMs can be determined through the use of maps. This makes it easier for some to withdraw cash. Some Bitcoin users refused the fees paid when using ATMs, which exceed 5%. Investors can be exposed to price changes by trading Bitcoin derivatives such as contracts for difference, as it is a financial asset like other assets, and in this way investors do not own Bitcoin but only expect its price changes. Trading Bitcoin via derivatives is attractive to many investors because it allows for profit-taking whether prices are high or low. Derivatives can be like trading using leverage, making it possible to make bigger profits when prices move in your favor. So how do you buy Bitcoin? This totally depends on your investment goals and ambitions. When you buy Bitcoin through an exchange, ATM, or trading site, you are considered a hodler. The term HODL is the Bitcoin community and means long-term holding of the coins. You are fundamentally aware of the future of Bitcoin and you will never worry about periods in which the price of Bitcoin goes down, but in the long run you will benefit when you reach a predetermined goal or when it makes sense to do so. But if you are an active short-term trader, it will suit you better to trade CFDs, as Bitcoin is generally an asset that fluctuates significantly, which means that short-term Bitcoin traders see more opportunities when prices are in between and decline. Learn the basics of Bitcoin trading. Even though Bitcoin has been sweeping the media in the last 3 to 5 years, and you know its general concept, you shouldn't skip this educational step. Cryptocurrencies are direct digital money running on the blockchain technology, which is a participatory public bond wallet in which individuals make transactions, i.e. transfer currencies, between Bitcoin wallets. Each transaction has a special signature that ensures the protection of your personal data. While all activities in the blockchain are transparent and public, your identity details are not disclosed. The system confirms your trades through the mining process. The most widespread and powerful digital currency is Bitcoin, while all other digital currencies fall under the category of Litecoin. If you want to dig deeper into the characteristics of Bitcoin and the technologies used, you can visit bitcoin.org or check out Bitcoin magazine. Even if you consider yourself well-versed in this topic, do not stop looking at cryptocurrency news and the opinions of experts who are almost the only source you can rely on to make buying and selling decisions. Learn about trading strategies. While there is conflicting news about Bitcoin crashing or flying high, the percentage of people who trust this currency is rather low. However, we all know that she gets a lot of buzz and has an audience that follows at least 2 types of behavior. The first group is trying not to bet on price fluctuations, but rather to invest Bitcoin for the long term. They are ready to bear the consequences of their highs and lows with patience, waiting for the price to rise further. The adopters of this method consider Bitcoin as a means to support technical progress and the future of digital currencies. That is, they invest for their own reputation and goals and not to achieve income from them. The second group considers Bitcoin a traditional asset that allows it to generate profits in the short term. These are the Bitcoin traders, experts with a strong analytical background and a good knowledge of the technology used in digital money, as well as the adventurous and interested, who are ready to trade non-stop due to the fact that the Bitcoin market, unlike other markets, operates all day, all days of the week. Bitcoin, its risks to the global economy. The local and international media, economic markets, and stock exchanges have paid remarkable attention to the Bitcoin currency. What is this currency, and does it carry negative consequences? Bitcoin is a digital, virtual, currency that was started in 2009 by a mysterious person who called himself Satoshi Nakamoto. It is not a traditional currency because it does not have a central bank, state, or body that regulates and supports it. It arose through a complex computer process, and was then monitored by a network of computers around the world. There is a difference in the views of economists about this currency. The British Capital Market Authority warned investors that they could lose all their money if they buy cryptocurrencies. But the U.S. Capital Market Authority allowed two traditional companies engaged in securities activities, CME Group and CBOE Global Market, to start completing financial contracts in Bitcoin. In the same context, one of the economic observers of the Al Marada website points out that despite the popularity of the electronic virtual currency Bitcoin, it has not been accepted in the Arab oil-producing countries and in some countries that do not recognize it because it has negative consequences for dealers. There is ambiguity surrounding the trading of this virtual currency, as countries are concerned about using it in illegal operations, for example, facilitating money transfers to terrorist cells, or facilitating money laundering operations and transferring them between countries under the pretext of investment. He pointed out that despite monitoring their operations in some countries that recognize them, they are not without some abuses and the withdrawal of hard currencies from central banks. He wondered, how do we trade in unclear financial instruments, which until today have not been accepted by many countries in the world that warn against trading in them? He pointed out that this currency attracts some countries that suffer from fragile economic conditions. The observer reminds that the Bitcoin electronic currency was the main credit for the two global cyber attacks, the first ransom virus WannaCry and the second Petya ransom, when the attacking hackers demanded hundreds of thousands of computers in the world to pay a ransom in Bitcoin in order to return the pirated files to their owners and reopen the devices that have been crippled by the virus on a global scale. The observer warns that Bitcoin still constitutes a fertile place to carry out some games and withdraw hard currency, or withdraw dollars, from central banks.